Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the last 3 times. Suyash Maheshwari. With me is Amit Ranjan. It's a Thursday morning and the stock markets here in India, they have opened in red once again, but the cut isn't as deep as what we have come to expect lately. In fact, Nifty has pared most of its losses in the morning trade itself. I mean, that said, expect volatility to remain high today, because remember, today is a weekly FNO expiry for Nifty contract. Not to forget that the earnings season is on, and a slew of companies from both Nifty and the broader markets, including the likes of SBI, Asian Paints, Bharat Petroleum, Hindustan Petroleum, Relaxo Footwear, among others, will report their earnings today. Apart from that, I personally will be paying close attention to the banking stocks, especially the public sector ones, because they have corrected sharply in the last few sessions, falling as much as 10% after RBI proposed norms on under construction infrastructure projects. Nifty Bank, in the most recent fall, has given up close to 2,000 points, but we are seeing some bit of a pullback this morning in both indices, Nifty Bank and Nifty PSU Bank. So keep an eye out on that. But before we delve deeper into the issues plaguing our market, as always, let's look at what we got in terms of a handover from the global markets. Amit, over to you.
Good morning, Suyash. Bond losses extended to Asia. Chinese stocks rose, but in the West, it was a mixed thing. Dow Jones closed in the positive at 0.44%. S&P 500 closed flat. Nasdaq Composite closed in the negative at 0.18%. Stocks 600 in Europe was closed slightly up at 0.34%. Hang Seng this morning is up 1.21% in the green. Nikkei is up 0.41%. Apple, despite the announcement of their AI-powered products, closed in the negative yesterday. So much from the West.
All right, and not much in terms of global cues. I mean, the Wall Street ended pretty much flattish a day after we closed flat. I mean, it looks like they are taking cues from us now, Amit. But, just a couple of things worth mentioning. Bond yields, they have moved up slightly. They are up by about 3-4 basis points, back at 4.5% mark. And crude has inched up, slightly as well. And it is around $84 a barrel. And I'm talking about Brent crude here. Nothing major, but remember, in the last 3-4 sessions, all these three cues, your bond indices, the dollar index, as well as crude prices, they were adding comfort, but they are inching slightly up. So keep an eye out on that perhaps. But again, the factors to worry about are local. There are, multiple factors at play, and Indian markets, remember, have sort of decoupled from global markets in the last 3-4 sessions, because the global cues have been healthy. We have been talking about it, how Wall Street has done fairly well in the last 4-5 sessions, whereas our Indian markets, they have witnessed a sharp fall. Nifty has fallen close to about 500 points from a record high of 22,794. Nifty Bank, on the other hand, has corrected close to 2,000 points. Now, talking to analysts, there could be multiple reasons at play. One, the fourth quarter earnings season has been nothing to write home about. There has been disappointments apart from the financial name, the broader markets. The guidance coming out from some of these companies is especially disappointing, and that I think is why we are seeing some bit of a stock specific correction. Also, RBI has been rather proactive. They have been taking stringent measures against the banks. We heard of this, higher provisioning for under construction projects. Also, there is some buzz going about, RBI sending notices to gold companies for their cash disposals. The factors, again, locally are something that we need to keep an eye out for. And remember, we are also in the election season, and ahead of the voting day, remember, expect market to be a bit volatile. If you compare to, back in 2019, something similar happened. India VIX, jumped by about 50%. I am talking about 2019 here, by about 50% during the voting period. India VIX jumped by about 50%, and the markets, Nifty, corrected by about 4-5%. And right around that time when the results were going to be announced, when the counting day was, we saw a big up move, and the market pretty much went on to the bull run from there on. We are witnessing something similar. At least two of those factors have played out. One, Nifty, India VIX has spiked, Nifty has fallen. Will we see that some bit of a rally around that June 4th when the results come out? That of course we'll have to wait and watch. But again, considering that how the markets have corrected, it's very important for us to keep in mind our support and resistance levels. And for that, joining us on the show is Santosh Meena, Head of Research at Swastika Investmart. Santosh, thank you for giving us time here on News 9. I want to begin by asking the big question that is on one's mind. I mean, is the correction over? There are some signs of it. At least to me, it looks like, Nifty is near its bottom. Yesterday we saw a sharp bounce back from that 61.8% retracement level. Even today the fall isn't something really concerning. And Nifty Bank, I mean, that is also seeing a pullback. What's the setup overall looking like in your opinion, sir?
Yeah, first of all, good morning and good morning, everyone. So yes, there are some signs that market is trying to bottoming out around 22,200 level. And if you look at the put call ratio, which is around 0.75 level, and if you look at the FI's exposure in the index, which are at a low of 39%, and Nifty is trying to find the support, but we need a follow-up buying on the market because on the upside, 20-day moving average is now acting at a support resistance level, which is placed around 22,435 levels. So Nifty has to cross this 20-day moving average, 22,450 level to see further strength. I think this month can remain volatile. Downside looks protected around 22,000 level. Maybe after, if Nifty slips below 22,200 level, then 22,000 to 21,700 band make a strong support area. So overall structure is bullish, but in this bullish structure, we are seeing a lot of volatility with intermediate correction. Like 2019, Nifty corrected ahead of the results, but before the results, ahead of 2 to 3 days before the results, Nifty started climbing. So maybe such kind of thing happen this year as well. So after such correction, we can expect a rally, but we need a follow-up buying in coming days.
All right, and India VIX has also jumped up sharply. Do you think that this low voter turnout is adding or making the markets rather jittery in this election period?
You can say that yes, India VIX is rising sharply from low of 10. It is now currently above 17 level, so almost a rise of more than 70%. But similar trend was seen in 2019 and 2014. In 2019, it rallied from 12 to I think around 30 level. In 2040, it rallied to 40 level from the same 12 level. So such kind of move we have seen in the past as well. And I think this India VIX can see further upside towards 25 kind of level this time. So volatility will pick up. But yes, there is some nervousness we can see because of some low voting turnout, and investors are sitting on sidelines. Earlier, we used to see higher buying by DIs compared to selling by FIs. So yesterday we have seen good buying number by DIs, but for last couple of days, DIs buying have come down in comparison to FIs selling. So DIs and HNI investors are sitting on sideline for time being. That's why we are seeing pressure at high level. We are not seeing sharp recovery from the lower levels.
Right. And I mean, there are enough and more, binary events in the next 4-5 months for the markets to be concerned about. And maybe that explains that 70% spike in India VIX. But we'll move on to Nifty Bank because that has been a major drag on the market. But yesterday, again, like Nifty, the index took support, and it took support around the 40-day exponential moving average, placed at somewhere around 47,900 mark. This morning, we are seeing some bit of a pullback. I mean, but from what I can see now, most of the gains have been paired. We are still holding above that 48,000 mark. So would you say it's a dead cat sort of a bounce, or do you think that after a 2,000 point correction, some relief rally is our way?
Yes, if I talk about the bank Nifty, 47,700 is a strong support level. It is not a dead cat bounce because bounce is very minimal. I think only 150 200 points. But yes, it is trading at an important support level of 47,700. But it has to cross its 20-day moving average, which is placed around 48,400 level. Once it will cross 48,400 level, then we can see a recovery towards 48,600, 49,000 level. Today's HBI results will be important. Generally, it also set the tone for the market. So let's see. But yes, it is trading at important support level. It has to show strength to move Nifty higher because Bank Nifty plays an important role to change the sentiment of the market. But yes, I believe it will also remain volatile and sideways. On the downside, 47,700 is an immediate support. If it slips below 47,700, then we can expect a move towards 100-day moving average, which is placed around 47,200 level. But that will be a good buying point.
All right, 47,200 would be a good buying point, but before that 47,700 is where we can see some bit of support. But another reason why we are seeing this pullback perhaps in Nifty, bank and banking stocks in general is probably because of Bank of Baroda, because in a major relief to the public lender, RBI has lifted, in the market after market hours yesterday, has lifted ban imposed on Bank of Baroda's BOB World mobile application, which barred it from onboarding new customers. For those failing to recall the issue at hand, let's jog back our memories to October 2023, when the regulator had asked Bank of Baroda, India's second largest state-owned lender after SBI, to suspend any further onboarding of its customers onto the BOB World mobile application with immediate effect. According to RBI, the action against the lender was based on certain material supervisory concerns observed in the manner of onboarding of new customers onto this mobile application. Santosh, I'll come to you. A good opening, a strong opening for Bank of Baroda today. It was up about 2.5% and about 2% as we speak. But just to draw parallels with what happened with Bajaj Finance, when RBI lifted its ban a few days ago on the NBFC, the stock opened about 6-7% higher, but paired most of the gains on the same day itself, and is now actually below the level it was when the restrictions were lifted. Can we expect something from Bank of Baroda?
Yeah, that could be possible, because you can see after a gap up opening, we are not seeing follow-up buying. And if you look at the trend, most of the PSU banks since the beginning of 2024 in a range. If you look at the Bank Baroda chart, so on the upside 285 is acting as a resistance, on the downside 250 is acting as a strong support. So I believe post election result we will see breakout from this range. For timing, I think this stock will remain sideways in the range of broad. This range is broad on the downside 250, upside 85. In this range, it may remain volatile, or there could be possibility if market see further correction, that it can again retest the level of 255, 250. But that will be a good entry point. So for timing, there is no clear trend in Bank of Baroda.
All right, no clear trend in Bank of Baroda. That's a word coming in from Santosh Meena. Santosh, please stay with us. It's time to slip into a short break. We'll be back with you because we have plenty more to discuss.
Luxury is now becoming a need rather than something that you aspire to be. So that is adding a lot of fuel. Obviously, government has played a vital role in it.
In a city like Mumbai, a luxury home may be something upwards of rupees 10 crores. In city like Delhi, again maybe something upwards of 8-9 crores. But in Bangalore, we typically define a luxury home anything which is upwards of about 3 crores.
It's a combination of increased wealth, availability of more luxurious homes, and simultaneously the overall economy doing better.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also a responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
how do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface, but not the living people?
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
Watch Allu Arjun on Duologues with Barun Das. Streaming on News 9 Plus.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Welcome back. You're watching First Stick here on News 9, and let's look at how the market is doing, because remember in the morning we were seeing some bit of recovery after a muted opening, but Nifty has fallen back into the red. In fact, Nifty is down about 0.2% at around 22,251 as we speak, and this is as of 10 a.m. Sensex is down about 0.3% at 73,228. The broader markets, they are mixed this morning. Mid cap index is essentially flat at 50,000, and the small cap index is down about 0.1% at 16,441. But Amit, coming to you, the biggest drag on the markets this morning is Larsen and Toubro. It's actually responsible for about 30% of Nifty's losses this morning, and I mean the results were decent, but I think the primary source of disappointment for the street was the miss in the margin guidance. What's your assessment of L&T's results and what's going on with the stock?
Well, RBI has come out with new guidelines on infrastructure projects, and probably that has affected the analysts' guidance on the stock. As far as the results are concerned, they have beaten expectations. Net revenues have grown 15%. Analysts were expecting them to grow around 12%. Net profits have gone up year on year 10.3%. Analysts were expecting little over 9% growth in net profits. Their inflows have gone up to 3 lakh crores. Order book stands at 4.75 lakh crores. They have successfully completed the buyback of equity shares, bolstering shareholder confidence. So all the boxes are ticked in the positive. The reduction in the guidance is probably the primary reason why the stock in the last 1 month and the last 5 days and even today is not really doing well.
All right, and Santosh, what's your take on Bank of Baroda, on actually L&T over here? Because this numbers, they are ahead of expectations, but we are seeing some bit of a disappointment. I think, again, the source of disappointment for the street comes from the management guidance for FY25. What's your take on the stock? Because this was one stock, I think a lot of people were betting on L&T to, drive that infra push in the country. What's your call here?
Yes, recently this stock was on a strong bullish momentum, but in last few days we have seen a decent correction in this counter. So this correction is a good buying opportunity, because I believe this 3300 to 3250 area will provide a strong support zone, and we are seeing recovery from the lower levels. So this area can act as a strong support zone, and investors can latch on this opportunity. So I think you should buy at current level. If it manages to hold this zone, we can see recovery towards 3700 level. So this correction should be taken as a buying opportunity.
Good morning, Santosh. Another company that announced their results yesterday was TVS Motors. Revenues went up 24% year on year to 8,169 crores. Net profits went up 18% to 485 crores year on year. What's your take on TVS Motors and the auto pack, two-wheeler auto pack?
Very strong opening for TVS and Hero MotoCorp.
Yes.
I mean, Hero Motor is up over 4.5%, TVS Motors 6%. I mean, the dream run for two-wheelers and especially, the bike segment of the market continues. Santosh, your take?
Yes, definitely. All the two-wheelers are showing strong momentum, and there is another tailwind for them. We are seeing commentary from most of the management about the rural recovery, which is also pushing these stocks higher. So, if you look at the TVS Motor chart, it is showing a strong bullish momentum and form a double bottom at 1900 level. I think it may again head towards its all-time high around 2300 level. So, stay long in this counter, trail your stop losses. There is further upside is possible in this counter.
Santosh, considering most of these two-wheeler stocks, whether it's Eicher, whether it is Hero or TVS, they were not doing well in the last 5 days. Do you think it is basically the buy on dips enthusiasm that is carrying them? And do you see this lasting?
Yes, as I said that the momentum is strong. The recent pullback was a buying opportunity. We are seeing a sharp recovery from the lower levels. So dip was being bought, and I believe this momentum is likely to continue. We are going to see fresh high in TVS Motor, Bajaj Auto also had further higher. Yes, but if we talk about the momentum, Hero MotoCorp and TVS, this will remain our preferred bet.
Alright, TVS Motors and Hero MotoCorp are the preferred bets of Santosh Meena from the two-wheeler space, which is again expected to do well and continue doing well for its investors. Remember, this has been one pocket of the market that has generated immense wealth for the investors in the last 12-15 months. If I'm looking at the stocks, Hero MotoCorp has delivered returns in excess of 70%. Bajaj Auto stands out actually, and it has delivered returns of close to 95%. Essentially is a multi-bagger on a 12-month basis, but that's enough on the two-wheeler space. Santosh, before we let you go, the market, it has been quite choppy lately, and we are facing some bit of a selling pressure in the last few sessions. At a time like this, what are the recommendations for the investors for the very short term?
Yes, I think the overall structure is still bullish and stock specific action is there. So recent correction in the market should be taken as a buying opportunity. So my preferred bets are first is Hindalco, strong counter, and after a correction it bounced back from its 20-day movement. So 666 will be my target, 615 will be stop loss. Second one be Abbey Capital. We have seen a strong bullish momentum in this counter. We are seeing a fresh re-rating in this overall group, and the recent correction is a buying opportunity because it is trading its near important support area. So 245 should be your target, 210 should be a stop loss. Third one is the Biocon. It is showing bottoming out formation for last many days. It is in band period. Once it will come out of F&O band, I think it will see a rally of 5 to 10% in a day. So buy with a stop loss of 298. Target will be 333. Another metal counter, Tata Steel. We are seeing delivery based buying for last couple of days. Structure is bullish. 180 will be my target. 160 should be a stop loss. Last one from auto space, Balkrishna Industry. It is also a rural play and a heavy commercial vehicle play. So 2600 is the target. 2400 should be a stop loss.
Those are the top trading ideas from Santosh Meena for the very short term. Sir, thank you for giving us time here on News 9. Always a pleasure speaking with you.
Okay, thank you. My pleasure.
Alright, and we'll move on, and Nifty, as I mentioned, it's seeing some bit of a pullback after that initial knee-jerk, resurgence. We opened at around 22,200 odd levels to 22,224 to be precise, went on to go to about 22,300, which is a level which not only coincides with, the last two sessions closing, but is also now the 40-day exponential moving average for the index. So I think going forward, if we are to see some bit of a pullback, Nifty first needs to take out 22,300 with conviction, because it's essential for two reasons. The market has been closing there in the last two sessions, and again the 40-day exponential moving average lies over there. Beyond that, I think 22,400 odd levels, 400 to 430 is where I see, you know, the next level of resistance coming for the index, because that is where your 38.2% retracement level is, and this is the retracement of this entire, you know, the most recent rally from the April low of 21,777 to the most recent record high of 22,794. So of that entire 997 odd point, 1000 point rally, the 38.2% retracement level is at around 22,400. Also, your 20-day simple moving average is also at around that 22,410 odd mark. So that becomes a key resistance. But I think if you are looking for trend reversal from here on, I think 22,500 will be the gatekeeper for bulls, because, you know, time and again the index has reversed its course from there on. It was also, remember, back in January, the first peak that we made for the year was at around 22,500 odd levels. From there on, we, you know, time and again we would test those levels, but reverse course from there. And whenever we did manage to, you know, break past 22,500, on two instances we did that, and both times the market went on to scale a new record high. In the first instance, we got to 22,752 odd levels, and then in the second instance we got to 22,794. So after this correction that we have seen of about 500 points, I think that are the levels that you need to keep a track on the 50 share index. But you know, there are some signs that the bottom is around the corner. We'll talk more about that after this very short break.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, you know, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
The lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, you know, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more, streaming on world's first news OTT, News 9 Plus. Download now.
Welcome back. You're watching First Stick here on News 9, and we were discussing, you know, factors that at least make me wonder if this correction that we have witnessed is over. You know, we discussed what levels that you need to track on the upside. On the downside, I think so far, look at the texture of the market. You know, the bulls were, at least actually the bears were, you know, heavily in control of the broader market as well. That tide has shifted. You know, more stocks are advancing than declining now. The broader markets, they have, you know, yesterday they snapped out of a 6-day losing streak. Both ended with modest gains this morning. Flattish, still, you know, in the red, but flattish. The mid-cap index is down about 0.2%. So I would like to see the broader markets, at least the sentiment improve over there before we talk about, you know, this pullback in the headliners. But if you are talking about the headliners, I think 2-3 sectors will play a key role. One, of course, we discussed about Nifty Bank. Nifty Bank has the highest weightage on Nifty. So that, of course, gives direction to you know, where the market overall is heading. Nifty Bank, after, you know, 4-5 days of sharp correction where it fell close to 2,000 points, is seeing some bit of a pullback. It has reclaimed 48,000. PSU banks are also participating in this upside, so that gives me hope that you know, this pullback could continue for Nifty. Another factor that I am keeping my mind or at least my eye on is what FMCG companies do, because, you know, in this 3-4 day correction that we saw in the market, FMCG stocks were actually the ones that were providing support. Couple of days back, the market gave up close to almost 1.5%. FMCG, Nifty FMCG was up close to 2%. This is, there are multiple reasons for it. One, that, we are seeing some bit of a green shoots of recovery as far as the rural demand is concerned. The March quarter numbers were out, and after nearly 5 quarters, rural demand, rural consumption outpaced urban demand. So that is a very good sign to see. Another factor, I think, why the FMCGs could be a pocket that one could look at for the next few months is that we are expected to have a normal monsoon in 2024. So that makes me wonder if FMCG could take leadership from here on, and considering that the sector has not done much for the investors in the last couple of years, in fact, it makes me wonder if the valuations are also, attractive enough for that long-term investor, for that tide to come in for the FMCG pack. Only time will tell that, but let's discuss earnings season, because we are in the thick of the 4th quarter earnings season, and a slew of Nifty and broader market companies such as SBI, Asian Paints, BPCL, Hindustan Petroleum, Relaxo Footwear, among others, will be announcing their results today. Let's start with the biggest of the pack, State Bank of India. India's top lender is likely to witness a muted quarter amid a sharp fall in net profit due to one-time wage revision and higher operating expenditure. Slower loan growth is also expected to limit the increase in net interest income, which is the difference between what the bank earns in interest and what it pays out. SBI's NII is likely to grow marginally by 0.7% on a year-on-year basis to 40,693 crore in the March quarter from 40,393 crore in the year-ago quarter. The lender's net profit is expected to see a sharp fall of up to 20% year-on-year to 13,400 in Q4 of FY24 versus 16,695 in the year-ago period. This drop is mainly due to additional provisions of about 11,000 crores in the second half of FY24 to cover a 17% wage hike after an agreement between bank unions and Indian Bank Association. Another key measure, your net interest margin, which indicates how profitable the bank is, it is expected to shrink by about 43 basis points, dropping from 3.6% in the 4th quarter of FY23 to 3.2% in the same quarter of FY24. Despite these challenges, SBI's asset quality is expected to remain steady. Analysts forecast gross non-performing assets to improve to 2.3% in Q4 of FY24 from 2.8% in Q3 FY23. The net NPA is also expected to improve slightly, falling to 0.6% from 0.7% in the same period last year. Moving on to the stock, apart from the dip, from the recent dip due to RBI's proposed norms on under construction infrastructure projects, the stock has done fairly well for the investors. In the last 6 months, it has surged close to about 40%, in fact over 40%, and year to date it's up almost 30%. Some of this upside, of course, came after, SBI got government approval to sell its stake in Yes Bank. But keep an eye out on that, because SBI is trading higher this morning, is trading with gains of about 0.6% as we speak. That could be a big mover of the market in today's trading session. But we have some other big major companies lined up as well in the pipeline, Bharat Petroleum being one. What are the expectations, Amit?
It's a very curious case with Bharat Petroleum. Now, Brent crude had crossed $90 to a barrel levels in April. It has come down to around 80 levels right now, which bodes well for BPCL and HPCL. And probably that is why revenues are expected to come in at 1,20,970, up 2.4% from 1,18,112 levels the same period last year. But sequentially, they are expected to go up by as much as 4.7%. The kicker comes when we look at net profits and EBITDA. Net profits year on year are expected to come down 15.5% to 5,474 crores. They stood at 6,477.74 crores the same quarter last year. EBITDA is expected to come down 3.5% to 9,146 crores. It stood at 9,478 crores. Sequentially, however, net profits are expected to jump by as much as 61%. So Yash, what explains that?
I mean, I think that has, as you rightly pointed out, that has a lot to do with the crude oil prices, how they have moved rather sharply. Remember, just a few months back, in fact 2 months back, before this tension between Iran and Israel broke out, Brent crude was hovering, it was sub $80. From there on, we got to about $90 a barrel. So I think that has got to do a lot with, a lot of these downstream companies, because remember, it's a big input cost from them, crude oil prices. From there, they make, refined products. So that if the input cost grows up, it compresses their profitability as well as margins. But we'll move on. Asian Paints is another one, and that also has crude oil price in the dynamics, right?
I have one more question on this. Do you see the stock coming back over 66% over the last 1 year, but down almost 1.5% today? BPCL.
That, of course, I mean, not to put out any forward-looking statements over here, but again, with these companies, a lot it has to do with, how the crude oil prices react. Right now, we are seeing some bit of easing in Brent crude. We've got to about $92 a barrel on Brent, but have eased about $10 from there on. Also, whenever government thinks that these, the oil manufacturing companies are making excess profit, they come and increase the windfall tax. So that side of the equation, that that's something you can't predict really, right? That's something that you can't put in your forecast. So what happens for the stock? Of course, that is there to see. But again, it has done phenomenally well. So maybe once you have made those sort of profits, it would make sense to take some out of the table, especially considering the kind of environment that we are in, considering the number of binary events that are to follow over the next few months. So it would make sense, if you have done well in the market in particular stocks, to maybe take some off, at least the amount of capital invested, and let's keep some on the table to drive that momentum. But that's all the time we have in this edition of First Check. Thank you for watching. We'll see you at 4 p.m. on Last Check. Coming up next is World Business Report.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world
Absolutely.